welcome to TheoTrade. This is Don Kaufman. You are watching the Theo Night video for July 9th, 2018. First and foremost, S&P futures, Nasdaq futures, Dow futures, and Russell all on the bid in a big way inside of today's session. However, you got to ask yourself at this point in time, we'll take a little detailed look into the charts over here and look at some specific products. But one of the things you really have to ask yourself is, you want to trust a market where the Dow is all of a sudden the leader on a percentage basis? And I think that's actually a fair question to ask right off the bat. And the reason you want to ask this is, first and foremost, what you're looking at here in terms of a chart. Well, this happens to be none other than the S&P futures, right? It's the S&P. This is the 30-day 1 hour. So we're right back up just shy of that so big round number of 2,800. However, if you look at a couple of the key stocks and key sectors that bounced today, it's going to leave you with a little bit of a question mark over here. Now, I talked about the financials pretty much ad nauseum in this weekend's kind of update, and you're actually seeing the financials bounce today. Now, the financials, and we talked about this particular level coming down to the level of 2650. There it is, the 2650. I mean, once, twice, three, four, what is this, fifth time's the charm. And again, we bounced in a harsh way today on side of the financials. The financials are actually up 2.3%. That right there is what was carrying a lot of the moves specifically today inside of the S&Ps. But kind of as I questioned a moment ago, do you trust a market where the Dow was the leader? I say the exact same thing about the financials, because the financials, there's been absolutely no love. So since the highs that we've had over here that are off the $30 level to recently, facing this 26 kind of 50, again, do you trust a market, or is this just a kind of bounce before a bit of a fade? So if you're looking at this, it's not just the financials that actually caught the bid. What else has been brutalized lately that caught a bid? The emerging markets. Now, this is something specifically I talked about in last week's videos. Why? Because we actually have been doing a number of ratio back spreads in here. You can see the ratio back spread is fully in the money. It's starting to work, people. It's not home yet, but we're starting to work at the ratio back spread in the EEM. We've been expecting the bounce inside of the EEM. We've been looking for bounces in a number of key products. In fact, we talk about products that have been absolutely kind of decimated. You're also getting a bounce inside of Caterpillar, a bounce inside of Boeing. Cat and Boeing alone, okay, explain much of the move you're seeing specifically inside of the Dow. Nevertheless, okay, here we sit as traders and we're seeing these bounces go on, and you're looking like, well, the S&Ps, Don, are still back up, close to 2,800. Of course, I agree. Nevertheless, you have to look at this most recent bounce as a little bit of an opportunity. What are some of the opportunities over here? Well, I'm actually going to sit back now. I've got a number of bearish positions already inside of the financials. I have bearish positions inside of Caterpillar, inside of Boeing, and depending upon how this bounce kind of plays out in the next day or two, I might re-up and actually add a little bit to some of those positions. Again, add specifically to bearish positions. How might I do so? If you look at something like the financials, like the XLF, okay, if you wanted a duration position in something like the financials, you can come out and you want to go north of about an 85 delta on the puts, okay? And what I'd effect be doing is, again, I'm looking for something that's got greater than about an 85 delta. I'm trying to create a synthetic short stock position specifically inside of the financials. I might go into something like these 30 puts. Now, you have to recognize some of the risk. First of all, I'm going 74 days out. Why? I'm looking for duration. I'm admitting I may not be right in the short term. But the nice thing is when you're buying that in the money put, you don't have much extrinsic value. What is that? It's time value. There's no time value really in this option. All you're buying is real meat. You're buying what? The intrinsic or real value, okay, of a given option. And that's in effect what I'm trying to do, is create a cheap short position. So XLF is one of the products that I might consider doing that in. Now, you do have to be careful in the financials. There's earnings coming out. Now, other products, okay, Caterpillar. If I'm looking at Caterpillar, I do not look at this bounce just yet as being opportunistic. I mean, Caterpillar would really have to fly back up to about 147.5 before I might step in and feel a little froggy and want to go after another bearish position inside of Caterpillar. Specifically, I want to kind of delineate I already have a bearish position in Caterpillar, right? And I've got, again, just north of that 85 delta on. So as you're looking through the marketplace and you're starting to recognize, you're like, oof, again, 2,800, like how does Don maintain, a bearish position? It's because the products that we are maintaining those bearish positions in, okay, this is simply put, this is a bounce and I'm looking at it as an opportunity, okay, in the midst of this bounce. Question, of course, is going to loom, how far is this bounce going to take us? Are the S&Ps going to exceed the 2,800 level? And I think that's absolutely plausible and possible. Nevertheless, the underlyings that I just pointed out, including the financials and Caterpillar and Boeing, got to look at it as being a bit opportunistic. These are products that have been beaten down, okay, and are seeing a nice bounce back to the upside, and we still fully anticipate some of those products to fade in the near future. Okay, so that is absolutely a bearish, okay, setup that I'm talking about, specific to the financials, specifically to Boeing, all right, into Caterpillar. However, this bounce could last for a couple of days. We'll get more for a feel for that in the coming next, 2 to 3 trading days. All right, switching gears a little bit. So what else is a little odd in today's screen? Well, I'll tell you exactly. If you're taking a look at the S&P futures, again, they're up about 0.8%. Most of that, again, is driven specifically by the financials. But okay, what has been the leader lately? All right, what's received the most love lately? Well, pick your evil. You want to talk about the Russell, or do you want to talk about the Nasdaq? When I say pick your evil, the Nasdaq surprised us today. Why? Because the Nasdaq still pretty much outperformed the S&Ps, but by a marginal level. The point that I want to make with that is lately, the Nasdaq has been the only thing, okay, really taking off to the upside. Just take a quick glance here at the Nasdaq specifically, having more than a bounce to the upside. The S&Ps, of course, on a percentage basis, faring a little bit better. When you start to look at this, though, on a year-to-date basis, and again, I'm just going to come down to, let's use the spiders here and cruise over to a year-to-date percentage. The S&Ps are just barely positive on the year, where once again, if you look at the Nasdaq is up almost 12%. Okay, the point that I'm trying to make with this is all of a sudden money isn't necessarily rotating as heavily into technology, and they're actually putting some capital back to work in areas that have been kind of beaten down. Nevertheless, one of the aspects that I've been talking about and looking for this week specifically is going to be taking a few stabs at short positions inside, again, short positions inside of technology. Now, we have done this, okay, in the last couple of weeks on and off, and we've had some degree of success. If you've looked lately at the Nasdaq, it has just exploded to the upside. Again, on a year-to-date percentage, we're up almost 12%. However, we took a stab in shorting into the Nasdaq, and we caught it correctly, okay, just about 2.5 weeks ago, where the Nasdaq sold off a little bit. We exited profitably outdone. Right? In the next and coming days, I am going to be looking for re-upping that short position, and make no two ways about it. I see that we're a stone's throw off the all-time high over here, and I'm even anticipating a bit more of a rip to the upside, specifically inside of the Nasdaq, but I'm going to take another stab at it. However, I am not likely to use the Qs, okay? And I'm more likely and more apt to want to use the XLK. I want the purest version of being able to enter into a short position in terms of technology. And you can see I've already started layering a few positions in. I'm using, in effect, what we call in-out spreads. Again, we're using in-out spreads. This is like a $2 wide spread for about, 65 cent debit. The other spread that I happen to have on specifically in the XLK is what we term a risk twist spread. Now, for those of you that have never seen the risk twist spread, is designed specifically to take advantage of what would be a much more monumental down move sometime in about the next 2 months. So again, there's two types of trades that I'm going after in this case, both inside of the XLK. And it's been a while, and I've actually shied away from trying and attempting to short technology. We're taking very small steps back into shorting technology in what has just been a relentless move to the upside. Today, for the first time, we're not seeing weakness per se in technology, but on a percentage basis, it's simply not the outperformer. With that, it's a lot to think about. Stay tuned. I'll be doing trades all throughout the course of this week in the TheoTrade chat room. Have a wonderful evening, everybody. Bye-bye.